Hey guys, welcome to Tuesday, the 15th of March 2022. And a lot of downside that we're seeing this morning across the equities picture. Your DAX down 1.2, Euro stocks down 1.5, and then you cross over onto those US markets, and you can see, actually, NASDAQ is now only down. Well, it's pretty much flat in the session now, picking up from a nice area. We're going to get over the charts, but really, big fireworks this week are going to be the Fed and FOMC tomorrow evening. We're going to get the statement release at 6 p.m. and then you're going to get Jerome Powell at 6:30. We're going to be live from 5:45 p.m. So do stay tuned for that one. Going to be live on YouTube at the same time. So let's get over and have a look at these markets here, and you can see, really looking around. Oil, I think, was the biggest sort of downside that we saw across these markets yesterday. You can see just the break here quite early in the morning, around 8 bells, and big level 106.14s. Just gave it up, came down to test on trend. Really kind of break by break. It was early on 8 o'clock, little flush back up, can't hold 106.14. So that was really me set in for the short here, and then just really basically went off for the rest of the day. Fundamentally, why is this happening? Well, I think it's somewhat pricing in the SPR release that we have of 60 million barrels plus, tandem sort of coordinated global release. I think that's got to be priced in. What we saw with the last SPR release was, probably a couple of weeks of downside, and then we really picked up the bid, so we just kind of got cheap, and I can show you that really on the daily bars here. If we kind of go back to November, where is it? November, we're on weekly bars here. So back into November here, you could see that 60 mil barrels released coordinated. It's only 3 days worth of US requirements. However, we pulled back really from the, let's say, call it 82s, all the way down to 60 spot 25s before then picking up our socks and trading up into the highs where we are now. But that's that's a different kettle of fish when we're talking about topping out at 130s, and we are now trading 96 spot 74s coming into the 2009 low, which was 96.22s, right? So it's a big old level there to come up to trade, and just to give you a flavor of what that looks like and what that did look like in 2009. Here you can see this little area here, double tap lows actually, on the 9th of Feb, the week of the 9th of Feb, and 17th of Feb consecutively, and then just up we go. So that's the real major support that we have in this market right now. Just get us back to real time where we are here. So yeah, 96 spot 22s to trade, imminent on the downside. We're down another 6% at market right now. So oil equities taking an absolute pasting on this as well, as you can imagine. It's looking quite trappy for longs here this morning. It's kind of got this pattern where you kind of think it's just going to break out of this downtrend. But really, it's got to trade this level 96.22s. Also, just to be aware, there is a gap here on this market left open in yellow from the 25th of Feb on the reopen of trade. I think it was. It was a reopen of trade Friday into Monday, Sunday night for GMT traders. So, that's also got me wondering about where we can find support really here on the pullback as well. Seeing actually now, just as I'm talking, the ladder is jumping new lows on oil 96.38 trades. So yeah, we're going to park that one there. So further downside imminent on oil. Not ready to be a buyer just yet. Now, moving on to the NASDAQ and these US equities, we can kind of bump over here. And you can see on this daily bar chart, what have we got trading this morning? We have the 500 daily exponential moving average coming in support, 12,960 spot 53s. It's not been pleasant. First touch, a little bit of a bounce. Third touch now this morning on the hourlies. I think we can have a bit of a bounce from here, to say the least. At least targeting 13,450s for the swing, 13,704s. I think we can really, we've come quite cheap. But one thing to be mindful of is, like, for example, the last time we traded this level was way back here, in March 2020, right? And so the world was falling apart here at this point in time. So, and again, now we have Russia invading Ukraine. So in a sense, the world is falling apart again. So I just want you to, not be too crazy and putting the farm on this one. I mean, this is not trading or investment advice. This is simply analysis. Good, wholesome analysis for your markets. All right, so just be mindful of what happened here. All right, so you got 12,899.75 also as a big level on the downside here. What is that level? I'll show you now. That is the low from May 2021, right? Just in here. Okay, so do be mindful of that. I think there's a general unwind in the post here, and you know while a large risk profile will fare well over this level, over the next month or two. That doesn't mean that um for the day traders, that you can just kind of get super long here and survive very little risk, or well, risk pressure, right? So already we're seeing a little bit of respite across the equities downside this morning. We're doing it. We're This is now turned into being okay downside. To be honest, Asia didn't have a great session, I have to say. Do consult the morning read, which is by Reed Ahmed Rossley, one of our traders here. Really fantastic coverage for your morning time as a trader. All right, cable. We've been looking at this 3015s on support right now. I seldom talk about cable, but really big area line in the sand here. This actually goes all the way back for me. This is about as big as it gets in terms of my analysis on cable here, right? So really, I took the low, right? How the hell? Why do you have this level here, Tim? Well, I took the low, right, from the 29th of April 1996, right? It's an excess push low. So then the low of the 2000, the 22nd of May 2000, right? I mean, I really don't care how old it is. It's just technical. That's all it is. It could be yesterday's. It doesn't really matter to me. But nice little area line in the sand. The reason why I still have it on my charts is because I've seen the market respect it. Right? Look at here in 2002. The market pushed above, reversed down, boom, and then we didn't come down for about, I don't know. Well, we haven't really come down for that for 10, 15 years. Right? So we're retest. Actually, it hasn't come down to test at all since. Um, where are we? 3015s. It was the low of day on the 13th of May 2002, and we have not visited that since, right? We've not visited that since. So let's have a little look. Okay, sorry, I spoke out of place. We revisited in 2016. Again, you're seeing this level respected quite a bit as a good line in the sand. So here we are, uh, currently trading this around the lows, right? But it's a big level. I like risking against these sort of big levels for nice moves. So anyway, that's enough on cable. All right. So what do I see on the NASDAQ? I see probably a bounce back to the 13,287s above. That was APAC from Monday. On the SPOOs, I don't know. She's pretty weak. I'd probably see 4086 halves trade on the bottom S2, and you're seeing a Dow trading into the 32 592s, already finding support here this morning. So this is the Dow, all right, and that 32 592s is the low of the 21st of June 2021. If we can hold that level, I'm happy to, coming into the US Open at the New York time of 1:30 today. I'm happy to be long this market. If we can't hold that prior to the open, I think we're going to press down on this trend here from the 24th of Feb and the 8th of March. I think we're going to press down on that trend, possibly break, and then test into the 500 exponential daily moving average, complement with the 31,606 on the downside. So let's again have a look at what that level is. Actually, I need to update that level, seeming as I've rolled. That level is a bit out of whack. So sorry, hold on a sec here. So yeah, you're seeing that was the high at the 25th of Feb 21, and then it was the low of the 25th of March 2021. So, you know, that does remain below as support 31,505s, almost in confluence with the 500 daily moving average. All right, so that's it for the equities. Gold, gold. I kind of like the 1929s. I mean, I've been talking about this for long enough. You're seeing the support is here through APAC, through European session so far. I like the longs. I like the longs. 1981's target on the swing. You've also got pivot confluent with that Friday low there. 1960s. Really nice opportunities here. Should the 1929s break down, or we're coming back into what was formerly a gap high here. That level, just get the prices on here at 1921, and of course the 1900 psycho level below. All right, looking at the bonds just to finish up here. I mean, I don't want to go too much into this because I think with Fed tomorrow, these markets may slow down to a grind for the U.S. session tomorrow. Let's see. You know what I mean? But currently, we're pricing in 25 basis rate hike. Yeah, 25 basis rate hike, and that's it. I mean, for me, and this may sound stupid, but I think there's a 20% chance that there's no hike. Now, look, probably bring that down to 10%, but I'm not pricing it out completely. All right, stranger things have happened in these markets, and I've seen them. So, well, you've all seen them. So, yeah, just keep that one behind your ear for tomorrow. We'll have a good old chat about this anyway at 5:45 tomorrow night. All right, so that's it for me for this pre-US session. Please do click to like and subscribe and get notified when we go live tomorrow night. And listen, have a good session out there, and I'll talk to you then. Take care. Bye bye.